Hey, what's up, my friend? So in today's video, I want to share with you, why I hate chasing breakouts. But first, right, if this is the first time you're watching this video, or you're a seasoned veteran watcher of my YouTube channel, thank you, I appreciate it, alright? Here's what I want you to do, right? Hit the thumbs up button and subscribe to my YouTube channel. The button is below, right? Just click subscribe. This way, whenever I publish a new video, you don't have to worry, right, that you might miss it because you will be notified. Sounds good, right? So just take 1 second, click the subscribe button below, hit the thumbs up button. I appreciate it. And with that said, let's get started. So first thing first, right, this is the chart of Bitcoin. And if you've watched my earlier videos, like for example, this one here, this one is the collapse in the stock market, what happens next. In the 12-minute, 40-second mark, right, I actually talk about Bitcoin and I explain to you, why I think this market is about to collapse lower. So if you have not watched it and you want to understand my thought process into how I actually, anticipate the market could possibly break down lower, this is the video to watch. But again, I don't want to waste your time, right, playing that video. So now back to the topic on hand. Bitcoin has broke down. So what now? So some of you, at this point might be, tempted to chase the market. After all, the market has, broke down lower, right? It's moving fast, man. Let me, get on board. Get some quick profits. Before you do that, right, let me just share with you, why I don't recommend it. In fact, I hate to do this. I hate to chase the markets. If you look at Bitcoin, okay, the market has broke down. Yes, all right, I can see it, right? And here's the thing, right? If you were to chase the breakdown right now, let's say, you short on the break of this low, where will you, put your stop loss? Ask yourself that question. Where will you put your stop loss? Well, you might look at, the structure of this market and you see, hey, previous support, right? That could act as resistance. So you put your stop loss at this level. Does it make sense? Because if you think about this, right? If the market, like Bitcoin, it were to retrace higher, this is where the market could find potential sellers at, prior support becoming resistance. So if you put your stop loss smack at this level, you're asking the market to, hit your stop loss and take your money. Okay, it doesn't really quite make sense, to put your stop loss at this level. So now if you ask me, right, a better place or a more logical place to put your stop loss is at least, a distance above this prior swing high. Right, at least you can see, right, this market is making a series of lower highs consistently. So if it were to, have a sign of strength that the market is about to reverse, it has to at least break above the previous swing high. Do you agree? So that's it, right? Your stop loss, right? Logically, it should be a buffer, a distance away this high. Again, you don't want to put it smack above this high because the market could just retest the high and then hit your stop loss and then continue lower. If you can see over here, right? Over here, market hit this, this one here. Okay, this is quite close, right? Retesting almost the previous high. If you put your stop loss just around this level, you might get stopped out. Similar for this, right? Almost reaching the prior high or even this high. And then it collapsed lower. So this is why you don't want to put your stop loss, right, just above the high. Always give it some distance, a buffer. And if that's the case, right, you can see that your stop loss, right, a buffer above this high would be somewhere around the 6,800 level. Somewhere here, right? This would be a conservative, logical level to set your stop loss on Bitcoin. And here's the thing, here will be your entry, right, shorting the breakdown over here. So you can say that from here to here is your stop loss, right, the size of your stop loss. And if you do the math, right, it's about from 5,200 level, 68 minus 5,200 level is about $1,600 stop loss on Bitcoin. And you can see that it's pretty done wide, right? So this is why you don't want to chase the markets, because from a risk to reward standpoint, it's not attractive at all. So how do you, trade this market, if you want to trade it? So my suggestion is a couple of ways you can do it. Instead of chasing the market, okay, what you can do is, let me share with you the first possible scenario is to let the market form a pullback. Let it give you a pullback, showing signs that the market is about to make the next wave lower. So for example, it could be in the form of a bear flag pattern, right? Like this, right? Like this, a bear flag pattern, right? They consolidate. Right now, if it forms a consolidation, you now can refer this swing high as your stop loss. And this means that you are going to have a tighter stop loss. You don't have to, go all the way up to 6,800, which is at the prior swing high. Right now, you have a new swing high that you can reference to as your stop loss. And in turn, what this means is that you're going to get a better risk to reward profile on your trade. A tighter stop loss, right? This means that your risk to reward is improved, right? The market don't have to move so far, right, for you to earn 1 hour. You just need to move a small distance and you are 1 hour in profit, 2 hour or even 3 hour. So that's the first thing that you can do, right? Waiting for a somewhat of a pullback, right? A small tight consolidation before shorting the breakdown. Alternatively, right, what you can do is that you can use multiple time frame to time your entry. So if you look at the 4-hour time frame, you see that this Bitcoin, you can see that, you know, if it does come up back towards this high, right, at this previous support act as resistance, you can wait for the market to come into this market structure and form, right, a new lower high and lower low to time your entry. So you look something like this. The market does this retracement. You now have, you know, a series of, you know, higher low and higher high. And let's say what if it does this, right? It breaks down lower, forms a pullback, looking somewhat like a bear flag, and then it breaks down lower, breaking this swing low. This is an opportunity for you to go short because right now it's telling you that, number one, the daily, it's in a downtrend. Number two, this market, the pullback is likely to end because the market structure has tell you that the sellers, they are in control, right? When you see this lower high and lower low over here. So you can go short on the break of this low, and this level is where you can reference as your stop loss, right? Set it just, you know, 1 ATR, let's say, you know, somewhere over here as your stop loss. So now you can see that from here to here is the size of your stop loss, right? This is about $300, right? Here to here. And again, it's much tighter compared to the chasing breakout stop loss that you have seen earlier, which is very wide. Okay, so this is why I said, right, I hate to chase breakouts because from a risk to rewards perspective, right, it's just not favorable. So this is just one example on Bitcoin. Another market that I want to share is natural gas. Same concept. Okay, so if you look at natural gas, this market, I think is off the radar of many traders because it's a market that not many of you trade, but the price action principles is the same. At this point, notice, right, the huge bullish momentum, right, strong breakout. Again, many traders, they are tempted to go long, to buy. But this isn't the best time to be buying because why is that? Number one, we talked about earlier, your stop loss, right, is going to be pretty wide, your stop loss. If you look at it from market structure perspective, the next logical place to put your stop loss is at least below this swing low over here. And it's huge, right? It is huge. Just look at it, right? It is huge stop loss. Okay, number two, the second reason is when you see such big moves in the market, when the market goes parabolic, it goes crazy, the reversal or the pullback can be equally swift towards the downside. Why is that? Because if you think about this, right, when the market makes a strong move, let's say up higher, boom, right? If you are a buyer and you have missed the move, right, where do you want to queue to go long? Chances are, right, you will tell yourself, man, I missed the move, right? If this price over here is, let's say, is $10, you want to be queuing back at $10, the original breakout level, right, to go long, because this is where, you know, previous resistance becomes support, or maybe psychologically you think, oh, $10 is the price that was a good value, so if it comes back to $10, I want to buy. So that was that's the reason, right, why, you know, market structure, right, it holds, right, because of this psychological tendency, you know, in our head. So this is why, right, when the market goes parabolic, right, the down move can be equally swift towards the downside because there is no floor to support these higher prices, right? Unlike, right, this type of price action where you see, you know, a stair-stepping price action, higher high and higher low. If the pullback were to come, right, this is a level that, you know, traders might be interested to go long because this is a prior swing low. There's a so-called floor level to support these higher prices. Whereas compared to this type of, you know, explosive move without any floor to support, right, the pullback can be very swift or the reversal can be very swift as well. So this is what we've seen over here on natural gas, right? You look at the reversal, it's just insane. Okay, it's so swift, right? Because as I've said, there's just no floor to support these higher prices. So at this point in time, right, the market did rally it back up higher, but again, you have no business, right, trying to buy this market at this point in time because number one, right, I just mentioned earlier, your stop loss is very wide. So market conditions like this, again, I would rather stay out. Don't try to chase the markets, right? The two reasons I just shared with you, right, is actually, you know, sort of like common sense, right? You don't want to be chasing the markets because number one, from a risk to reward perspective, it's not worth it. Number two, if you want to chase the market, you can see that you have to endure this type of pullback that comes along, right? So chances are, most traders, they won't look at market structure. They just, you know, oh, go long and let me put an arbitrary, you know, stop loss amount, $200, $300. Chances are this pullback will have eaten your stop loss. I don't think, right, many of you would have, you know, stop loss below this swing low, right? Just ask yourself, be honest with yourself. When you set the stop loss, it's always based on a number in your head, like 500, $200. I don't know. Okay, so these are, the two charts that I want to share with you, right, to kind of nail home the concept of why you don't want to chase the markets, especially when it breaks out, where the candles are bullish, the price has gone parabolic. I know intuitively inside of you feel like chasing the market because it might seem that you're missing a huge part of the move. But trust me, more often than not, you'll thank yourself for being patient, for being on the sidelines, because the market could just as well, reverse down lower, and you're thankful that you're not caught on the wrong side of the move. Okay, so with that said, right, I have come towards the end of today's video, right? I hope you enjoyed it. Any feedback, comment, just let me know below. And with that said, I wish you good luck and good trading. I'll talk to you soon.